Welcome to the Deep Dive. Our goal today is, well, to cut through the noise around RLX Technology's recent earnings call.
Yep. Q1 2025 results. We'll try and pull out the key stuff.
Exactly. Help you get up to speed quickly on how they're doing and the industry landscape they're facing.
And it's definitely an interesting picture. Some strong numbers against quite a challenging background globally.
Definitely. So let's dive right in. The numbers reported for Q1 2025. Net revenues hit RMB 88 million.
The big headline there is that 47% year-over-year increase. That's pretty significant.
Yeah, quite a jump, especially, like you said, considering the broader market headwinds.
For sure.
And profitability. They reported a non-GAAP operating profit, RMB 106 million.
And that's not just a one-off, right?
No, exactly. It's actually their sixth consecutive quarter showing positive non-GAAP operating profit.
So some consistency there.
Right. Margins improved too. Gross profit margin, 28.6%. And the non-GAAP operating profit margin, that jumped 9 percentage points year over year.
Okay, solid improvements.
And one more thing, cash flow. Positive operating cash inflow, RMB 27 million. Which is a lot better than last year.
So just looking at those headline figures, it seems like they're executing pretty well.
It does. But context is key here, isn't it?
Absolutely. And the call really hammered home how challenging the environment is. Since the start of 2025, the e-vapor industry, well, it's been under increasing global scrutiny.
You mean regulations?
Yeah, more stringent regulations everywhere. And it's led to this year-over-year decrease in overall e-vapor exports from China in Q1.
What's causing that decrease specifically?
It's a mix of things. Bans on disposable products in some key markets, new excise taxes popping up, and generally just tougher enforcement in quite a few countries.
Did they give examples on the call?
They did. Like the UK and New Zealand, they've announced bans on disposables. Those kick in next month, apparently, so distributors are already getting cautious. Spain brought in heavier taxes back in April, and then you've got places like Mexico, Vietnam, Kazakhstan. They've just implemented complete bans.
Wow. Okay, so not just tweaks, but significant market changes.
Exactly. Major restrictions, even closures. It's forcing the whole industry to adapt.
And how's that impacting what people are actually buying and using?
Well, that's another big piece. It's driving changes in user trends. The major one they talked about is this big puff trend started in Europe. Now it's spreading.
Big puff. What does that mean exactly?
We're talking about devices. Could be rechargeable, could be disposable, but they hold way more e-liquid, like 14 to 20 milliliters.
Compared to what normally?
Compared to the sort of 2 milliliters you often saw in older traditional disposables or pods. So a huge difference in volume.
Okay, massive increase in liquid.
Yeah.
How does that change the economics for users and for the companies?
That's where it gets really interesting and kind of counterintuitive. For the user, the extra e-liquid doesn't cost the manufacturer that much more to add, you see. The main cost is the device hardware.
Right.
So the price for one of these big puff devices is higher, sure, but it's not proportionally higher given how much more liquid you get.
So cheaper per milliliter for the user.
Exactly. They get more puffs for their money per milliliter. Better value, you could say.
But what about for the industry's overall revenue?
That's the catch. While the volume of liquid being consumed might actually be going up, this lower price per milliliter really puts the brakes on overall dollar growth for the industry.
Okay. So more liquid sold, but maybe not more or even less money coming in overall.
Precisely. The call stated this is expected to cause a drop in the industry's total dollar value this year. They specifically called 2025 a transitional year. Most are expecting negative dollar growth for the industry.
That's crucial context. Industry shrinking in dollar terms because users are getting more volume for less proportionally.
Yeah. Though management did try to put a positive spin on it, saying, challenges also drive innovation, maybe more sustainable products down the line.
Okay, let's link that tough backdrop back to RLX's own numbers. That 46.5% year-over-year revenue growth.
Which looks even stronger now, knowing the industry context.
Right. And they said that was driven by their international strategy. They did mention softer quarter-over-quarter growth, but put that down to seasonality. Q4 is usually the peak.
Makes sense. And those better margins.
Yeah, the higher gross and operating margins, they link that directly to getting a better revenue mix from those international markets, plus ongoing cost optimization.
So managing the controllables, how about their cash situation through all this volatility?
They seem pretty positive there too. That RMB 27 million operating cash inflow in Q1, that was up significantly from just RMB 4 million last year.
Shows growth and better efficiency maybe.
That's what they suggested. growth in business scale and better working capital management.
Okay.
They even mentioned achieving a negative cash conversion cycle, which, for anyone not deep in finance.
It just means they collect cash from customers faster than they pay their suppliers. It's generally a good sign.
Yeah, they gave the numbers. Inventory turns in 25 days. They get paid in 13 days, but they take 81 days to pay their bills, at least in Q1. So cash comes in quick, goes out slow.
Strong working capital management, then, keeps cash freed up.
And they seem to have a good buffer anyway. RMB 16.2 billion in total financial assets at the end of March.
Right. Plenty of cushion. And that financial strength really connects back to their strategy. Management sounded pretty confident they could actually achieve positive dollar growth in 2025.
Which is the opposite of the industry trend they just described.
Exactly. They think they can buck the trend by focusing on what they can control. Their in-house product development seems key here.
How so?
Well, it lets them, theoretically, quickly design and launch products that are compliant with local rules and match these new trends, like the big puff products they started rolling out last year.
So the idea is, while others scramble with regulations in the shift, their agility lets them gain share.
That's basically the argument presented on the call, yeah.
Yeah.
But they're not just rushing into every market either. They mentioned being prudent about new market expansion.
Taking their time.
Yeah, waiting another quarter or two, letting the regulatory dust settle a bit before making big moves into totally new areas.
Makes sense. Is the regulatory picture clearing up anywhere? Or is it messy everywhere?
It varies quite a bit. They mentioned Southeast Asia seems to be getting clearer guidelines, which helps planning. North Asia is apparently reviewing standards.
And Europe.
Europe and Oceania, like we said, that's where the environmental angle is driving those disposable bans, especially UK and New Zealand.
All right. How's that transition playing out, say, in the UK?
Well, they said distributors reacted quickly, even before the official ban. Demand for big puff stuff is surging. The market's shifting away from the small disposables.
Gradually.
Yeah, a gradual shift. They expect it to be mostly done by year-end, especially once the ban is fully enforced in June. Interestingly, they don't think the trend will keep going to even bigger puff counts. Seems like there's a limit.
Okay. So, given all that, what are their specific strategies for actually grabbing market share during this chaos?
They outlined a few things. First, product development is constant. Optimizing what they offer based on sales data, launching new stuff, quickly focusing on function, convenience, cost, the e-liquid itself.
Okay, staying agile with products. What else?
Second, their channel strategy. Very customized, very localized. They're trying to take what works in one place and adapt it elsewhere, refining channel structures, picking the right local partners.
Any examples of that?
Yeah, they mentioned using a franchise model for exclusive stores in some Asian markets.
Oh.
Also converting existing stores to be RLX branded stores, which probably gives them better direct feedback and data.
Data seems important.
Definitely. They're also building out local teams specifically to collect detailed retail data. They admitted this might cost more in the short term, sales expenses wise.
But the bet is it pays off long term.
Right. Better route to market effectiveness because they understand the retailers and consumers better.
It sounds quite resource intensive. Do they feel they have specific advantages over competitors that let them pull this off?
They clearly think so. They pointed to their agile supply chain, their existing distribution networks as being key during this transition.
How do they compare themselves?
Well, versus traditional tobacco giants, they see themselves as way faster, more flexible. Compared to rivals juggling multiple product categories, RLX is all in on e-vapor, so they think they have deeper insights.
And versus other e-vapor brands.
Versus brands maybe just focused on pushing boxes, they emphasize their long-term, compliance-first approach, backed by that in-house R&D, designing products right from the start. Plus, they mentioned managing payment terms and inventory systematically helps cut down risk.
Okay, so let's try and wrap this up for you, the listener. Despite some serious global regulatory storms and this whole industry dollar value expected to shrink in 2025 because of the big puff economics.
RLX reported a strong Q1, good revenue growth, better profits, positive cash flow.
And they're telling investors they're confident they can actually grow their dollar value this year.
By adapting products, quickly using their own R&D, staying focused internationally, and really tailoring their approach market by market, channel by channel.
So why does this matter to you? Well, it really shows how crucial navigating complex rules and adapting to shifting user habits like this big puff thing actually is in this space.
Yeah. And their claim to potentially outperform a shrinking industry, it suggests they might have some kind of edge, agility, compliance focus, R&D muscle that maybe smaller or slower players lack.
It really highlights you need to look beyond just the headline industry trends and focus on how individual companies are actually executing.
Definitely. They also touched on mainland China briefly. Regulation is stable there, they said, but the illegal market is a big problem, limiting growth for the legal players.
So growth there hinges on getting approval for compliant products that can actually compete. They mentioned things like cooling agents.
Exactly. That remains a potential wild card, could be a future catalyst or continue to be a drag, depending on regulators there.
And underpinning all this is that solid cash position, the RMB 16.2 billion, giving them stability and options in a pretty bumpy environment.
Rush.
Okay, now for a segment we have to preface very, very clearly. This is absolutely not financial advice. Seriously. What follows is just a speculative, maybe even outrageous but plausible idea.
Purely hypothetical, based only on what was discussed in the earnings call transcript we've been dissecting. Think of it like a thought experiment, something you might brainstorm in an investment committee meeting, maybe.
Got it. Okay, go ahead.
All right. So remember that discussion about mainland China, stable rules, but growth capped by illegal products, and this need for approval of more competitive, compliant products?
Yeah, the cooling agent example.
Right. So the outrageous but plausible idea spins off that. It's a real long shot, okay? A bet on a very specific, minor, currently unannounced regulatory tweak happening in China relatively soon.
What kind of tweak?
Specifically, something that allows slightly more appealing features like those cooling agent levels they hinted at, but only for fully compliant products.
And the idea is?
The idea is, if that specific narrow change happened, it could suddenly make the legal market much more attractive versus the illegal one. And a company like RLX, positioned as compliant with strong R&D, could potentially benefit disproportionately.
Okay, so how would you even structure such a wild, hypothetical bet?
Well, keeping it low cost because it's so unlikely, you might think about something like a deeply out-of-the-money call option with a relatively near-term expiry.
So a cheap lottery ticket, essentially.
Pretty much. A low-cost wager on a specific, unlikely but potentially high-impact regulatory catalyst that was actually hinted at in the call commentary regarding their biggest potential market.
Okay. One last time. This is high GHLY speculative, pure concept, absolutely not financial advice. Please always do your own homework.
Couldn't say it better. Just an idea sparked by the call.
Right. And that really wraps up our deep dive into the RLX Technology Q1 2025 earnings call.
We covered the strong headline numbers.
Against that backdrop of global regulatory pressure and the whole industry dynamic shifting with this big puff trend potentially shrinking the overall market value this year.
And we looked at RLX's strategy, product agility, compliance, international focus, local execution, and their confidence in navigating this transition.
Just remember, all this information is purely for informational purposes. It is not financial advice.
Absolutely. It's a complex, fast-moving space.
So, thinking about everything we discussed, the constant regulatory changes, this transitional phase for the industry in 2025, what aspects of a company's operations, maybe beyond just the numbers we looked at today, do you think will be the most critical for long-term success in this kind of evolving landscape?
Definitely something worth pondering as we see how the rest of the year plays out.
Thanks for joining us on the Deep Dive.